Hello, guys, and listen, welcome to the show. Glad to have you here. We're going to get right started on the markets, and this is your show for Wednesday, April 11th, 2018. And listen, first thing we're going to start on is we're going to start the charts right here, and we're going to start with the Dow Jones. The Dow Jones today is down 158 points, but they say it's because of Trump and what he's saying about launching missiles or whatever. I don't altogether buy any of that. Okay, right now it's down 166 points. I just think that the market is making these, is following basically the course it's following. If you take a look at these peaks right here, she's found an area because the bond market has found a certain range. The market here, this market has found a certain range. They both found a certain range, and the ups and downs are just daily up, down, up, down. Look. I mean, you have an up day, you have a down day, an up day, a down day, up day, a down day, up day. It's just the way it's going along right now because it's found this certain range. And it's got nothing to do with what Trump's saying or whatever. It's just they're coming in and they're doing small buys on the dips, and just from one day to the next day. You know, they're just one day they sell and the next day they buy, and it's just up and down. But the market's found a certain range. What it's done is it's dropped off because of the bond price. It's got everything to do with the bond price. So let's go to the bond price because we got to show you right here what's happening. Let's focus in, and we see the bond prices yields are falling a little bit here. U.S. 10-year, 2.77. Let's focus in on the U.S. 10-year. And we'll see what's going on with the stock market. Because this is linked so close, it's like what we see is basically the same pattern as the stock market. This was your big crash in the stock market. Of course, now you have to understand this market right here is inverse. This is an inverse relationship. And so because this is tapering down right here, you see it had its peak. If we focus in, let's see, that's 1 year. We got to focus in for probably 3 months. Try the 3 months. Yeah, 3 months is perfect here. And what you see is it had its peak back on February 21st, 2018 of 2.94. That was the peak yields in the U.S. 10-year. And that was right when we were having the most stock market troubles and issues. Now what's happened is this has been slowly descending, as you can see, and it's still descending even today. This is fall. The yields are falling, right? And the stock market, if this continues, this trend continues, the stock market's going to make a little bit of, not a big recovery, but a little bit of a recovery because the bond market's recovering a little bit. The stock market's going to recover a little bit. I'm not exactly sure why the bond market should be recovering when the Fed is doing reverse quantitative easing or quantitative tightening. It should be the other way around. I don't know what's really going on. Maybe they saw what happened to the stock market, and maybe they're buying the bonds again secretly. But let me just say that I think that they're going to continue with their plan of quantitative tightening. And eventually what that plan is going to do is eventually these bond yields are going to start rising again. Wait for it. You know the old saying, wait for it, wait for it, wait for it. It's coming. You're going to see these yields rise above 3%, and then we're going to see the market starting to turn over again. But until that happens, as long as these bond yields are slowly descending like this, in this formation like you see right here, with the yields slowly descending, going down into 2.7s, and even it could even break below 2.7 down into the 2.6s before it changes direction. If that were to happen, you could see a little bit of recovery starting in the stock market. But that doesn't mean you should run out and buy into the stock market, because I'm going to tell you, this whole thing could turn around so fast when the Fed really goes back to their reverse quantitative easing, you know, their quantitative tightening, they call it. Stupidest thing I've ever heard of in all my life. Okay, so now let's take a look at Bitcoin. Bitcoin is 69.45 as of this morning. And what we see here is, if we look at the chart, we see that it made a bottom. This was its first bottom at 59.20. We see it's close to that bottom again. I could almost perceive, but you notice something? When it made that bottom, it just slashed down. It was like a falling knife, and it made its bottom. And then this time it's different. This time it's making a bottom, but it's more of a much more stability in the market this time when it's making its bottom. Okay, so we might not see a third bottom in Bitcoin. It's pretty much, I think it's pretty much made a bottom now. That's what I think. And the market's becoming stable again. Look at this. Look at this. What's going on right here? This is stability. This isn't any sharp moves downwards in price or anything. And this looks to me like a bottom. It doesn't look like it's going to go down any lower than this. And in the short term. Now, this is in the short term. It doesn't look like it's going to go any lower. If the stock market crashes, then it goes below 20,000, the stock market. Like I say, that's when we'll see a drop in this. But not until that happens. As long as we're going to actually start to see a recovery in the stock market, we could actually see these Bitcoin prices start to heat up again a little bit. This actually could happen. Let's take a look at cryptocurrency market capitalizations. What we're seeing here is Litecoin $115, 269 billion in market capitalization. Bitcoin dominance at 43.6%, and Bitcoin is 69.28. Ethereum $420. I think that's a pretty good little buy on Ethereum, to tell you the truth. Bitcoin Cash 655. That's probably a pretty good buy too. Litecoin, terrific buy at 115. And other coins I like. I like IOTA at $1.04. Monero is 168. That's a good buy on Monero right now. I think these coins could start to heat up again. I'm telling you. Before we have a crash. A crash will bring them back down again to earth, but I think they could actually start heating up. I think that they're do not count this as financial advice. Don't go out and spend your money on these coins more than you can afford to lose. But I think it's a good idea for everyone out there, instead of spending money on the lottery tickets and on the cigarettes, to buy into use the same amount of money to buy into cryptocurrency and learn how to use cryptocurrency. I'll tell you, it's a sure win. The lottery is not going to get you anywhere. All those lottery tickets you are buying, you ain't going to win. You ain't ever going to beat the thing. But you can beat this. If you bought the same amount of money in these as you do your scratching wins, you're going to win. It's a sure thing you're going to win eventually when the cryptos really take off big. Now here's crude oil. Crude oil, 66.04. She's heading up towards $70. I don't see it making it up too much past 70, but it might crack the 70 mark on sweet oil, sweet light crude oil. That means that what's the other one called? The other, it's a bit more expensive. That means the other one would be up about 72 or something. If sweet light crude crack 70, I think sweet light crude can crack 70 just barely. And when it cracks 70, these oil producers are going to start getting on to opening more wells. Just as simple as that. U.S. dollar index today, 89.52. Okay. The dollar has found a range, and it's been staying pretty much in that range recently. And a lot of this has to do with what the Fed's doing. Did I cover the silver price? Take a look at this. Take a look at this. This actually could be a little bit of a breakout starting in silver. Back up into the $17 range. It could be. It could be. It could be. Keep your fingers crossed for silver, guys. This could be a little bit of a breakout in silver. Today's the green line. Look at that, 16.70. That's the highest it's been in a while. We're up 14 cents today. I'll tell you, let's keep our fingers crossed for silver. Now listen, I want to talk to you guys about something. You know, I'll tell you what.